China and the yuan was a big idea for 2015. For 2016, let's just start with Europe for a moment here. How do you want to be positioned now that the first Fed rate hike is done and over with? What does history tell us?
I think history tells us that the dollar tends to rally into the first Fed hike and then sells off. Okay. And I think this time, especially so. I'm not saying, listen, I'm not saying that there's a fundamental reason for the dollar to weaken significantly. But I think given positioning, I think the risk is that, the euro could have a little bit of a run towards 112. Again, I'm not talking about 115, 120. I'm still forecasting 95 cents by the end of next year. But I think the risk is that going to Q1, if we go into a risk up, because by the way, history also tells us that the three last Fed hiking cycle, after the first Fed hike, the U.S. equity market sold off.
Right.
So usually, U.S. equity market sells off and the dollar sells off after the first Fed hike. And I think if that happens, you know what? We could see the euro going higher. We can see S&P going lower, which will be quite bullish for treasuries.
All right, I want to go into some of your other trades for the year. One that really caught my eye, and you said this was an election year trade, was sell 3-year Fannie Mae debt versus treasuries. What's the idea here? Why is this an election year play?
I think the idea is that, regardless who's going to get into the White House, I think there's going to be a tremendous, bipartisan agreement that something has to be done with the GSEs. They've been dragging their feet about what to do with the GSE now for some time. I think now the GSEs are very profitable. The government might decide that we need to get out of this business. If they decide to go out of this business either through privatization or just dissolvement, I think, investors can no longer assume that there's going to be an implicit guarantee by the U.S. government behind this paper. And then credit spreads will have to basically widen. So in some sense, the fact that these guys are now becoming more profitable because the housing market is coming back actually makes it less likely that the implicit guarantee is going to remain in place for longer.
All right, let's talk about China for a little bit, insofar as you might want to insulate yourself from unexpected events there. You like the Aussie-yuan pair. Why this pair in particular?
Well, think about it, right? Think about this. You just basically mentioned, at the start of the segment that, iron ore prices has gone up 7 days in a row, right? Aussie dollar trades on iron ore, and iron ore is largely a function of construction activity in China. Right now, the market is sort of sensing that, the data in China have been so bad, maybe they'll have to do a bit more easing, whether it's monetary or fiscal or anything else for that matter, especially given that Xi Jinping just decided to take on a pretty powerful deputy mayor in Shanghai, which suggests that the power struggle in China is now reaching a new level. All this would suggest that Aussie, I'm not saying Aussie dollar is going to outperform the U.S. dollar. I'm just saying that Aussie has already discounted a lot of bad news as far as China is concerned. What's Korea? Korea's largest export market is China. 16% Australia, which represents 16% of Korea's basic export. I think this is going to be a big story.
All right, and very quickly here, Saudi Arabia, there's increased speculation the kingdom may need to devalue its currency. Do you see a depegging in the works? I
don't see it, and I'll tell you why. It's very simple. Oil prices at $30 a barrel because the Saudis wanted that way. They wanted to drive down prices and wanted to drive the U.S. shale producers out of business. So if oil prices were to go down to, let's say, mid-20s, at that point, the Saudis will have to either devalue the currency or basically cut production. I'm going to assume that they're going to cut production before they devalue currency because Saudi Arabia practically doesn't produce anything other than oil. If they devalue the currency, inflation is going to go through the roof, and that will be very politically destabilizing for Saudi Arabia.